Another day, another red day in the market. I don't know if that makes sense, but it is another red day today. Hello everyone, welcome back to the channel. Today I want to talk about the market going down again and again, and Draftkings reporting earnings in the morning and why the stock dropped over 20% after they reported earnings. Now we can see here that the S&P 500 is down 38.38% today, the Dow Jones 0.36%, and the Nasdaq 0.76%. The S&P 500 year to date is at 9%. Even though it recovered, we know it was down 9.80%. It was actually down over 10%. I don't know why it is not showing it here, but it's now down 9%, even though it recovered a little bit and then it dropped once again. Same with the Dow Jones, it is currently down 6.55%, and the Nasdaq is down 14.03%. Even at its most, it was at almost 16% down. It recovered a little bit, but it still is down 14% at the moment. And why? Mainly because of the Russia situation. We know that Russia now has over 150,000 troops near Ukraine, U.S. official says, amid report of more attacks. The Ukraine government and Russia state-controlled media exchange fresh accusations of ceasefire violations near the country's eastern border on Friday. The Dow falls about 200 points today. On Friday, heads for second straight losing week on Russia-Ukraine tension. As we know, the stocks have struggled this week as investors continue to be on edge about the ongoing tension between Russia and Ukraine, because we know that this have been going around for days already. They said that Russia was going to back up and that they were not going to do anything, but we know now that that's not the situation at the moment in Ukraine, and they're actually going to attack apparently Russia. The thing is that the market is going to be closed on Monday because of President's Day, so basically we're gonna have a kind of a break for 3 days, Saturday, Sunday, and Monday this week after so much downturn in the market. President Joe Biden is expected to move more U.S. troops closer to Ukraine. NBC News reported that Ukrainian government and Russia state-controlled media on Friday exchanged fresh accusations of ceasefire violations at the border. Markets tend to overreact to geopolitical events. Still, oil prices dipped on Friday morning and energy stock retreated. APA and Scambler each lost 3%. Now, we have been having a nice earnings week so far. We have some companies crashing, just like Draftkings and many more, and Shopify and even more. But now let's talk about Draftkings. Draftkings is down 19.54% today. It's down year to date 36%, and in the past year 69%. So what happened with Draftkings? First of all, Draftkings shares fall 20% on 2022 outlook, as we can see that they reported a loss per share of 35 cents accepting items versus 81 cents estimated, and were able to beat analyst expectations on revenue as they reported 473 million in comparison to 445 million dollars. But Draftkings says that it expected an adjusted EBITDA loss for 2022 between 825 million and 925 million dollars, much higher than the estimated adjusted EBITDA loss of $572.7 million according to Street account. So that's basically not good news for the company, but this is mainly because they have been spending a lot of money. As they said here, the company showed that it's spending more money on marketing as it launches in new markets, which contributed to a wider loss from operations. It spent $981.5 million in 2021, for example, compared to the $495.1 million in 2020, which is something that they have been doing in order to be able to continue seeing a nice growth in the market, in the industry, and continue expanding. But at what cost? Because we know that they are basically burning a lot of money in marketing, and we need to understand if that's going to be worth it or not. Now, Draftkings raised its revenue guidance for 2022 from a range of 1.7 billion to 1.9 billion to a range of 1.85 to $2 billion. The company said the projection reflects the launch of mobile sports betting in New York and Louisiana at the start of the year, which this is very good news. They continue continue expanding and growing, as we can see. But this huge growth and these huge unexpected expenses is something that analysts and investors do not like to see. Now, still, they mentioned that Draftkings' strong fourth quarter performance exceeded their expectations on the top and bottom line. Our excellent quarter capped off a year in which 5 of our states were contribution profit positive. Now, continued health and more monthly unique payers, which is their B2C segment, increased 32%. Average revenue per MUP increase was $77 in the fourth quarter, representing a 19% increase. Draftkings is raising a fiscal year 2022 revenue guidance from, as I said before, Draftkings is also introducing fiscal 2022 adjusted EBITDA guidance, which we already said that it was not good at all. And Draftkings 2022 revenue and adjusted EBITDA guidance reflects the launch of mobile sports betting in New York and Louisiana in January 2022 and our demonstrated ability to engage users and acquire customers efficiently, which we are going to see how efficient they really are because they are spending a lot of money in marketing, way more than before. So we need to continue seeing that guidance in users and revenue as well. Following successful launches in New York and Louisiana, Draftkings is now live with mobile sports betting in 17 states that collectively represent approximately 13% of the US population. Now, we do have to take into consideration that this is an industry that is just like the MJ industry, which is not completely legal, like their product is not completely legal federally wise. So meaning that there are some states that do not approve online betting, sports betting, and obviously this affects them. As we can see here, for example, here are all sports betting in the US. The red ones are the ones that are already live and legal. Then the pink one are legal but not yet operational, and the yellow one active or pre-filed legislation. But the white one or the gray one, no legislation or dead legislation. So we can see that it's still not federally legal, and still that is something that is going to bring a lot of volatility to the company, just like with any other MJ industry. As we can see for the MJ industry, we can see that it's not legalized as well, fully legalized at the moment. It is only legalized in the states that is kind of black or really dark green, like the old West Coast here and some of the East Coast, but nothing else. That is something that's going to affect the company in the short term, just like it happens with this kind of industry of sports betting as well, because they have been having a nice growth, yes, and a nice expansion, but they still need to continue investing a lot of money into their company, to continue expanding in the US and maybe to other countries that is already legally, but in the US it's not federally legal yet. We can see that the revenue was $473 million, as we said, in quarter four, which is a 47 year-over-year growth in quarter four. We can see here that the revenue have definitely been growing year-over-year as in the last quarter and also in the whole year from $640 million to $1.2 billion. So they more than double their revenue year-over-year, and that's obviously very, very interesting. The thing in here is that their cost of revenue more than double. So it grew way more than their revenue from $346 million to $795 million. That is more than 100% growth in comparison to the revenue, and that's obviously something that we don't like to see that much. Same with their sales and marketing. It grew from $495 to $981 million in 2021, and in the past quarter from $191 to $278 million. That's why they had a loss from operation of $368 million in comparison to the $268 million in the past quarter of 2020. So their loss from operations grew about $100 million year over year, while in the whole year we can see it grew from $843 to $1.5 billion. And obviously that is not something that I like to see in companies. Still, Draftkings is a company that I have always been tracking, not because I invest in them, but because I invest in Fubo TV. Even though Fubo TV have also other businesses, they are also focusing in this at the moment. Now they report a net loss of $1.5 billion, all the way up from $1.2 billion. As I said, I'm not investing in this company. I'm not planning on opening any position in this company. I'm just investigating them because I invest in football, which is kind of a competition for them. Well, not a competition. It is a competition for them in the short term and even in the long term. But both have been having problems with the expansion in the country and all that. We do have to take into consideration that football is going to report earnings next week. I will be uploading a video on that to compare their earnings with Draftkings. Not the whole earnings, but their mobile sports betting segment. Now, I will leave you here my video on updating you guys with my M1 Finance portfolio and here for you to subscribe. Thank you and see you next time.